Welcome in. I am the crypto bull god. And in today's video, we're going to discuss some charts that are getting a little bit worrisome. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment. You got click that bell icon for all notifications to know when I go live for All in the Charts, my daily TA crypto live stream where I take your TA questions. Plus, you need to know when videos like this go live. You can find me on Twitter, YouTube, even the Instagrams and TradingView. It's one word, Crypto Bull God. Just a quick disclosure that none of what I'm sharing is financial advice. I'm simply looking to educate and to help others through sound, logical, technical analysis. We're all big boys and big girls, so we can make our own personal financial decisions. With that being said, let's hold on a moment. Before we get into the content, before we get into it, there's something that I want to clearly state to you. I am starting to see a lot of clickbait fear porn come about. There's a bloodbath. It's a crypto crash. Bitcoin to 15,000. Let's all take a deep breath. There are a lot of content creators out there that, and I really mean this, there are a lot of content creators out there that are looking to tug on your emotional strings so that they can get views. That is not what I'm doing today. I am still a bull. I am not bearish. I still believe we are in disbelief. I still believe there is a fifth impulsive top coming in this market as part of a broader Elliott wave structure that is going to take most people by surprise, and we're not going to follow this 4-year cycle. The market will do what fewest participants believe. And until that Elliott wave structure becomes invalidated, until we start to see some significant price action to the downside that would invalidate that structure, nothing for me has changed. Don't parse my words and start to make something that it is not. Towards the end of this video, there's one chart in particular where I provide empirical evidence to suggest what an average downfall in price would mean given what I'm seeing in one of the charts. I do not believe we are going to hit that price target, but I owe it to my audience, I owe it to myself to unbiasedly evaluate the charts. Right now, there are several charts, we're going to get into them, that do cause me pause for concern. However, at the moment, I am still very much in the camp that what we are seeing right now is corrective in nature. You're in two camps right now. You believe the price action that's going on in Bitcoin is corrective in nature, or you believe it's part of something more significant that really will result in a crash that will bring Bitcoin down to $15,000 and potentially lower. That is not the camp that I'm in. But there are some charts that are giving me pause for concern. And like I said, I owe it to you, my audience. I owe it to myself to stay informed, keep abreast of these charts, and make sure that over the handful of the next couple weeks, these things start to turn around in a more bullish manner. So with that being said, now let's get into it. All right, guys, we're going to cover 6 charts here. We're going to start with the 12-hour chart. You know, if you've been here for a while, the historical significance of the 12-hour chart in Bitcoin. Again, a key point that I'll hit on in this video, but Bitcoin has limited price data. So we need to get creative in terms of finding types of charts that express historical significance in Bitcoin. In this case, if we take a day and chop it in half and look at a 12-hour chart, the main idea to keep in mind is once we have this golden cross here, okay, once we have the golden cross and you have both the 50 purple and 200 pink sloping upwards, that is when historically we see a significant rise in Bitcoin. And we like to come down and touch the 200 simple moving average, but it tends to act as a magnet and repel it upwards, okay? This type of deviation is not as common if we go back into the history of Bitcoin. Once we've had this golden cross and both moving averages are moving up, to this extent for several days remaining under here until we push up, it's less common. Now you can see once again, we have deviated significantly from the 200 simple moving average. Ideally, the week of recording, which will be the 21st of August, we will have a significant push back up because we don't want to see the 50 simple moving average get another death cross in here, and we don't want to see lower highs and lower lows. This is what would be very bearish for price action. at the latest, at the absolute latest, we need to see by the week of August 28th a significant reversal to the upside and reclaiming areas up towards 29 to 30,000. We need to see some sort of V-shaped recovery come in here, because the longer we hang out below this moving average, the more bearish we should become. The daily, again, it's not a guarantee in the charts. Nothing is a guarantee in the charts. But if you study the history of the 200 simple moving average and on the daily chart, okay, this is the daily chart, there is a significant probability, now that we have a daily close below the 200 simple moving average, that we're going to see continued movements down and we will see a harder correction. It's not a guarantee, but there is a very high probability, because if you go back in time, which we're not going to do at this moment, but if you go back in time and you look at every single time, again, we've had this golden cross. You can see the golden cross here, right? And both moving averages are moving up. If you study the history of Bitcoin's chart, you'll note that once we see a candle body close go below, I'm not talking about price wicks, I'm not talking about what happened here. I'm talking about a candle body close go below the 200 simple moving average. It gives us a very high statistical likelihood that we're going to see a harder correction here. If we go to the 3-day, the reason that this gives me pause for concern is because we just got a golden cross here, okay? Now, we haven't had the opportunity for price to accumulate at higher values here, such that the 200 has begun to flatten and curl up. That's what we need to see to know this is not a fake out. Anytime you get a golden cross on any time frame, it's not just about getting the 50 going above the 200 simple moving average. It's also about both moving averages flattening and beginning to curl up. That is what we need to see to know this is not a fake out. Well, at the moment, we're getting a huge red candle come in here. And what this will result in, if I had to create a story for price, the more we hang out in this territory here, okay, the more it's going to cause the 200 to continue to curl down, okay, the 200 to continue to curl down, and the 50 to roll over as well and just begin to create a death cross here, right? That's why we need price action. We really need price action to continue moving up here to push those moving averages up, okay? So I don't like to see price action in this fashion close below both moving averages on the 3-day right after we've had a golden cross, right? Ideally on the 3-day, and this thing is going to close actually on day of recording on Saturday. You know, ideally the 3-day would be closing right at, realistically, 27,400. We get some sort of significant move up on Saturday. We'll have to see. At time of recording, we still have around 12 hours of price action, but that's ideally where things would close on the 3-day. Now, as we continue moving our way up, we're going to take a look at 3 weekly charts now, okay? And this is a chart that actually I'm going to cover on my live stream Sunday at 8 p.m. Eastern Standard Time. And if you're not subscribed to the channel, make sure you click the bell icon for all notifications to know when I go live for that live stream each and every single weekday. It's called All in the Charts. I take your TA crypto questions. I actually switched the live stream from Friday to Sunday, and I'm covering the weekly close. So at the time of this video dropping, it will have already taken place. So you can go back in time and take a look at that live stream from Sunday if you would like. But the more we move up, okay, in time frame here to these higher time frame charts, the more significant the views, okay? And the example I like to give is it's more significant in terms of what price is telling us when we're looking at a 1-week view than if we're looking at a 30-minute view, right? That lower time frame 30-minute view, those are for day traders, okay? But the weekly view, that's really for us investors, and there's more of a credible picture that is being painted within the chart. A lot of the volatility in those lower time frames is removed, price action is condensed, and it helps to formulate a more credible view in terms of price action. I hope that was helpful. So right now, you can see on the weekly, we're attempting to get that golden cross that we want to see. The 50 is beginning to curl, okay? And it's beginning to want to move up here as the 200 is continuing to rise, right? Ideally, at the weekly close, we would be closing above the 200 simple moving average. And this is just a basic premise in charting. Anytime you're below a moving average, it's going to act as resistance. Anytime you're above it, it's going to act as support, right? Now you can see we got to close below it here, and we popped our head right back up. Realistically, between now and Sunday at 8 p.m., I don't see us closing above 27,400. So what you'd ideally like to see is some sort of strong reaction to get back above this 200 simple moving average. But it is concerning that we're starting to get a close below the 200 simple moving average to me. Not to mention, I'm going to take off the NVT. I haven't found it as helpful. Not to mention the fact that the MACD is expressing a high degree of weakness here. The histogram's picking up the dark red, as well as the stochastic RSI. The other thing I don't like to see, the power of video editing. The thing I don't like to see on the stochastic RSI is that we have this negative cross down. Now, we're still above 20, but where it would really become a little bit more worrisome for me is if the stochastic RSI got below 20, right? The momentum would really be fading in this thing. It'd really be fading in this thing. The negative cross is one thing, but I don't want to go below 20. So that's also a little concerning for me. But number one, price action is king. This huge red candle body that's actually eclipsing our green move here, green bullish candle here, and now we're below the 200. That is concerning for me. We haven't gotten to the most concerning chart, though. So if we get to this chart, this is the Williams alligator. This is something I've looked at with you guys a few times before, and I published a video on it. The important thing is you want green above red above blue, right? Which we have here. Projecting out, we should see, in my opinion, based on history, a significant move in price when we've had those crosses. Besides the debacle in 2019, we've seen significant rises in price, right? So far, we have not seen a significant rise in price. So why is this concerning to me? You can see that anytime we've had the green above the red above the blue, typically if we go back in price action, you can see like here we touch the green. If we go back here, you can see we sort of touched the red here. The green almost crossed below the red, but it never did. Typically, what I'm attempting to point out here is once we have green above red above blue, first off, green always stays above red, red always stays above blue. The ordering of these lines don't cross back down, okay? So that's something significant to watch for. But also price hasn't gone below the red line. There was a point, I believe, in 2013 or 12 where we did that we just quickly flipped to, but it didn't even touch the blue, okay? So the fact that price is getting this low and now these are starting to curl down, that is concerning to me, okay? It is concerning. We need to see, again, this is another view that's telling us, okay, we've had a little bit of a deviation here that we don't like to see from a historical standpoint. Let's get that V-shaped recovery from where we're at, because the longer we hang out down here, the more likelihood it is that price is going to continue deviating and we're going to start getting the green going below the red and the red going below the blue, and that would not be good for price historically. The last thing on this chart I wanted to point out is the ADX DI. The DI is the yellow line here. We don't want to see, okay, we don't want to see the yellow go below this trigger line, which is at 20. And we don't want to see what's happening right now, which is the red is starting to, you see how the red, let me take off the DI for the moment. Or excuse me, let me take off the ADX for a moment. The ADX was the yellow line. The other thing on this DI that we don't want to see how the red is crossing above the green? That's not what we want to see. Okay, we need the green to stay above the red, and we need the red to be below the 20 trigger line and the green to be above the 20 trigger line. This price action is causing a negative cross here, and the more that continues, the green's going to go below the 20, the red's going to stay above the 20. That is not what we want to see. Historically, that has led to large corrections, so we don't want to see that. We need to see a turnaround such that the green doesn't go below the 20 and comes back up, and the red rolls over and goes down. Also, if we put the ADX back up, again, the most important thing here is we stay above the 20 trigger line. Now, let's get to the more concerning chart here. This is one that I can't unsee. This is the weekly Gaussian channel, okay? And we just flipped green, okay? In times past, again, all we can do is look at the data and interpret factually what the data tells us. When we are green with the Gaussian channel, once we re-enter the Gaussian channel with a candle body close. I'm not talking about wicks. If I measure approximately from the top of the Gaussian channel, once we've re-entered it with a candle body close, to the bottom of where we correct, that's what I'm showing here. Okay? We re-entered it here. We had about a 74.5% correction. We wrote it and wrote it and wrote it. We had a candle body close in here. Afterwards, we had an approximate 63% correction. We got above it here. Once we got a candle, you can see candle body close in here from the top of the Gaussian channel to the bottom of our move in 2020, 54% correction. Got above it, okay? Once we were out of the Gaussian channel, we didn't re-enter it until here. And from that point to the bottom of our correction, it was a 67.5% correction, which brings us to current times. You can see we have since re-entered it. If I take an average of all of these corrections, okay, again, the whole premise is once we're out of the Gaussian channel and we re-enter the green Gaussian channel with a candle body close, from the top of the Gaussian channel to the bottom of our correction, this is what this represents. 74.5%, 63 1/3, about 54%, 67.5%. The average of those corrections, the average is approximately a 65% correction. That would bring us down to a price target that I have poo-pooed many times with the clickbait fear porn that exists out there at $10,000. That would bring us down to $10,000. Am I telling you that Bitcoin is going to $10,000? Nope, that's not what I'm telling you. What I am pointing out to you is empirical data, like I always do. Again, I said this at the introduction of the video, guys. Am I bearish? No. Am I still bullish? Yes. Are there charts that are giving me pause for concern? Yes. Okay? All we can do is use the empirical data that's in front of us and use that to arrive to conclusions. One of the things I want you guys to walk away with, okay, beyond the fact that I'm providing you with an unbiased view of some charts that concern me, I also want you to walk away and say, well, when's the line in the sand? When are you going to start to get more bearish? I want to see how price comes in at the end of this month, okay? We have the week of the 21st, the week that this video publishes, as well as the week of the 28th of August. I want to see how those 2 weeks come in. Those 2 weeks are going to tell us a lot, in my opinion, about price action. Are we going to see a sharp recovery to the upside? Or, if I best exemplified on the daily, are we just going to be hanging out down here for several days? We're going into September. Guys, if we're going into September and we're still hanging out well below this 200 simple moving average on the daily, that is not going to spell well for price, in my opinion. We need to see some sort of a sharp rally upwards. We need to start to clear up some of these charts. That is when we can reassess price and have an honest conversation if these pauses for concerns are continuing to become validated and it's something more and we need to take it more serious, or price action essentially faked a lot of people out and we've had a V-shaped recovery and onward and upwards towards what I still believe will occur over the course of the next 6 to 8 months here. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment, click the bell icon for all notifications to know when I go live each and every single weekday for all of the charts taking your TA crypto questions. Until next time, everybody, let's all spread awareness and let's carry the education forward.
So what you gonna do, $5 on Crypto Bull Guy and his crypto maniacs and the entire cryptocurrency market?